Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 101. On today's episode, we're going to do a check-in, see how we're doing on our first half of 2023. And then we're also going to take a look and see how the stock market has done. What are some of the best performers? What are some of the surprises for the first half of 2023? And, how does the second half of the year set up for all of us? So get your mind right and let's get to work.
You dropped this.
All right, so welcome back to the show, everybody. First half of 2023 already in the books, which seems crazy, always seems just like time just goes by so quickly. And so especially with me, you heard in episode 100, moving, new challenges, my June was just a blink of an eye. And so if you're watching on YouTube, you'll see that the office looks much different than it used to. We'll get this thing cleaned up. We'll have this thing spiffy in no time. But this version is going to be a little bit raw, but we're excited where we're at. And so episode 101, we got some new beginnings here. And so we'll see how things go. But when you look at the first half of the market, man, I'm telling you, nobody expected this. And this is what we discuss on here all the time, is sometimes the market does things that you don't really expect it to do. And there's been a lot of negativity, a lot of noise all year long, people telling you not to invest or giving you reasons that you shouldn't invest. And then we see here the NASDAQ's up 31.7% for the year. And so that is the best start to a year for the NASDAQ since 1983. You have the S&P 500 up 15.91%. Dow Jones is the one that's not doing near as well. It's up 3.8%. But remember, last year the Dow was the best performer, only dropping by 8% for the year. And so you look at how much the NASDAQ has come back. It still has quite a ways to go. One of the things that most investors, it's not that they don't realize this, they just don't think about it. But if you invest in a stock and it drops 50%, it now has to go up 100% in order for you to make your money back. So even though the NASDAQ has done well, there's still a ways to go for many of the companies that got beat up really badly last year for them to really come all the way back to where they were. And so if you look at the Dow Jones, remember that's 30 stocks. That kind of gives you a broad overview of the entire U.S. economy, or at least it's supposed to. You look at the number one component for the Dow this year, it's Salesforce. It's up 59%. Really got beat up last year. But you look at second is Apple. Apple's up 49% for the year, which is just tremendous. Microsoft, American Express, and the ones that haven't done well this year are Johnson & Johnson, which is down 6.3%. They're dealing with some lawsuits from the talc powder. And so if those get cleaned up, it's interesting. Johnson & Johnson is a stock that I hold for myself and a lot of my clients as well. And last year, it was my best performer. This year, it's one of my losers. It's one of my worst performers of the year. And so, this is where diversification comes into play. Last year, it really helped me. This year, it's hindering me a little bit, but it's not, something I'm too concerned about. So, you look at that, and last year when Johnson & Johnson was doing well, I sold a little bit of that. You put it into things like Apple and Microsoft, the ones that were getting beat up last year. Now we have the reverse, looking to be, maybe it's a little bit, time to trim a little bit of some of these winners and put it into some of the ones that haven't done well. And so again, that goes back to that episode we did where we talk about trading around a position. You don't have to trade completely in or completely out of something. If you own 100 shares of Apple and you own 100 shares of Johnson & Johnson, let's say, you could trim 10 of the Apple and you could buy 10 of Johnson & Johnson, average it out, kind of rebalance your portfolio, so to speak. So not all of your companies, or rarely, I shouldn't say it should never happen, but rarely are all of your companies going to be working all at the same time, all hitting 52-week highs. Like, that is not a normal, path for the market here. And so you look at, where are some of the companies that have done the best this year? Well, at the top of that list is going to be NVIDIA. You look at how well NVIDIA has done, past $1 trillion in market cap. Remember, market cap is the entire value of the company. Big news on that. Apple crossed $3 trillion in market cap, which is way bigger than most economies around the world. And so you look at some of these companies, and I've been talking about Apple for years now on this podcast, and it's my number one holding, and personally. But I talk to clients every day, and the kind of metaphor that I always use is what other company can you invest in that is basically an extension of people's bodies, right? And you look at the iPhone, and you look at how many people own it. You look at how many services that you have that are connected to it. How many other companies you are accessing through that phone. It's just an incredible moneymaker for them and for us. And it's going to continue to be that way. Think about how many websites that you log into, and then you have to check your phone because they send you a text message to validate that it's you. You have to send that in. I mean, there's all these things that you do that keep you connected to that device. And so it's just incredible. But back to NVIDIA. NVIDIA is up 189% this year. And this is basically goes to artificial intelligence, right? So if you look at artificial intelligence, it is definitely the story of the first half of the year. NVIDIA makes that chip that everybody's going to be buying, and that's powering all of these names. So when you look at these AI-powered companies, those have become the best performers of this year. And so that is NVIDIA, that's Microsoft, that's, Apple and Amazon and Palantir. And, there's a lot of other companies that you can add on this. And so, yes, the hype of AI is out there. It has created tremendous value already. And so the part that we have to be careful with here is, are they able to meet the expectations of profitability that is expected of them? And so, you look back over the past couple of years or the past decade, and you look at things that were supposed to change the world, and we're supposed to make a lot of money. And hopefully AI will be completely different. And I actually think to some extent it will be. But I'm also very cognizant of the times where something was supposed to be the next best thing, the biggest thing. The stocks all went way up, and then they fizzled out over the next year or two. And so that would be something like 3D printing that happened around, I don't know, maybe early 2012, 2013. Everybody was going to have a 3D printer on their desk. We were all going to be printing whatever we needed at the blink of an eye. That never really materialized. And so you just kind of have these fads that go through, but AI, at the outset seems that it's going to be much different than that. And so, if you're looking at your portfolio, you have to look at one of the biggest questions I have received is, okay, everybody knows about NVIDIA. Maybe you haven't invested in NVIDIA, but you want to, but you're worried that now it's too high, right? So NVIDIA earlier last year, let me pull up the chart here on NVIDIA so I'm not just making up numbers. So you look at NVIDIA, you look at it year to date. If you would have bought it on January 5th, you could have got it for $142 a share. Wow, what a steal. And right now, as I record this, it's $423. So you look at that and you go, geez, man, I could have had it at 142. Now it's at 423. I feel like I'm chasing it. I mean, obviously you're chasing it. And, you're anchored to that price of 142. That's anchoring bias. But, you have to look at what has changed, right? The story of NVIDIA has changed. And so if you look at this, you say, man, this is a different company. The valuation's different. They have the AI chips that nobody can really compete with yet, even though some people say they can. This is going to be, if they're really selling as many of these as they say they are, this is going to be a game changer. And so when I look at this, somebody comes to me, 423 a share. Should I buy the shares? I look back over the last 6 months. I look at when they jumped, when they made that announcement of the AI chips, they went from $305 a share up to $389, basically right away. And so I'm getting a little bit more detailed here, but I think this is important. So when you look at that, they went from 305, right up to, let's say 390, 400. The lowest they have been since they announced all of this is 374.75. So let's call it $375. And so they came down to 375, and in the last month, they really have not broken 400 again. So let's say you want to buy some shares of NVIDIA. Well, if you buy shares here, that's fine. But you have to know, hey, you got to be willing to buy more. And, you need to be able to use a stop loss, right? So a stop loss sells you out automatically if a stock gets too low. So since that previous low is 375, I'm going to place it. If I want to be aggressive, I'm going to say 385. If I don't want to be aggressive and I really just want to protect my downside, I would put them at, I would say 370. The problem is if it gets close to 375 again, I'm going to want to buy more shares, right? So if I buy shares here at 423 and it gets down to 390, I'm going to be tempted to buy some more shares. So it really depends on what your time frame is, how aggressive you want to be. If you're just wanting to be in the stock, if you're wanting to be a part of this, there's a lot of analysts that are raising their price targets above 500 at this point. So, you got to think about that as well. But anytime you have a stock that runs up like this, that has a huge gain like this, you really have to think about, okay, I'm not going to buy in all at once. You don't have to do that. I'm going to buy a piece here, maybe a third here. If it drops, I'm going to buy a third. And then if it keeps dropping, I'm going to buy another third. So if you want to be aggressive though, and you're kind of wanting to more trade it, which I don't recommend. This isn't a recommendation at all. But you need to protect your downside in case something were to happen. So I would definitely have a stop in place at some point on a stock that is run this much. But NVIDIA is definitely the story of the year. And what's interesting is if you look in the past year, their previous high was 326. So that was their last year beat down price was 326. And so they have well exceeded that. They've gone way above it. So I really don't think you're going to have this. You don't have that ceiling anymore. Those AI chips allowed them to go right past that ceiling. And so, that kind of gives you a nice little runway here. But, their sales numbers are going to have to stay up in order for this to work out. So, you look at this and you look at all the negativity. I think when I look at the first half of this year, the one thing that I would point out to you is how much negativity there has been while the stock market has done well, right? That corporate earnings weren't going to look very good. Well, the corporate earnings have actually been better than analysts expected. We had that banking crisis early in March. A lot of financial stocks got beat up from that, many of them haven't recovered, but the Federal Reserve did their stress tests on a lot of these banks, and all of them passed. Many of the banks passed those stress tests. We had the debt ceiling worry that went through. That was kind of a lot of noise, right? We talk about noise all the time. Interest rates being volatile. They haven't really been. Volatility would mean that they're moving up and down a lot. We've just had this steady grind up, and companies are getting used to higher rates. Individuals are getting used to higher rates. People are still buying houses. The one kind of stalling area is that people don't want to sell their house to buy a new one. So you're having kind of a slowdown in existing home sales. And that makes sense because if you have a 2%, if the mortgage rate that you currently have, if it's 2.5% or 3%, it's going to take something like you moving or relocating or something in order for you to kind of trade out of that 3% mortgage that you have, which makes sense. And so, but inflation is steadily been coming down since the June 2022 peak. And so we'll see if that continues. But, we might actually get a soft landing. The year could be better than people expect. I mean, this first half of this year has been just incredible. I think the last, 13, 14 years, this is definitely the best first half of the year I've seen. And so it just kind of, brings home the point that this is why it's so important for you to continue to invest and be consistent with it. Because still to this day, I will talk to people at least once a week, and they will say, I'm waiting for the market to drop. I'm waiting for the market to drop. And I'm like, man, last year it dropped. What do you expect? There's some stocks that are down 95%. The NASDAQ got just absolutely crushed last year. But it goes to show, this really goes to show you that when you have a recovery, good, solid companies that have good financials, that are leaders in their field, are going to recover first. It happens time and time and time again because people end up selling everything. They take their ETFs, they take their mutual funds, they sell all of that stuff. But when they do that, they sell really good companies. And people like me and you and other, investment managers and people, they go in and they go, man, I can get Apple for $130 a share. I'll take as much as possible. Right. And so then those companies slowly start to increase. And you'll see most of the gain in the S&P 500 this year are those companies that I mentioned. They're Apple and Microsoft and Amazon and NVDA. And, it's the Magnificent Seven, as they call them, because they've done so well this year. And now you're finally starting to see kind of the rest of the market come with them. But it has definitely been tilted the first half of this year into those very big, profitable tech companies that are just kind of making, just doing so well. And so it's much different than kind of last year, right? Last year was the Procter and Gamble's, the Johnson and Johnson's, the oil companies. The oil companies have been pretty stagnant this year. They haven't, they haven't gone down, they haven't gone up. They just kind of been flat. And there's a lot of companies that have been flat this year as well. So that's the first half of 2023 for the stock market. Let's talk about your first half of 2023, right? This is a great weekend, holiday weekend. Happy 4th of July, everybody. Always a great holiday. I learned much more about the American Revolution. My daughter has scoliosis, and we were at an appointment in Boston to see a specialist. And of course, I'm a big nerd, so I always look for, anytime I take a trip, I'm looking for something. And so we did a tour of the Freedom Trail, and we did a tour of the Boston Tea Party ships. And so it's interesting to learn all that history right before 4th of July, and gives you kind of just a different perspective of it and appreciation, I will say. But anyways, middle of 2023, here we are. This is a great weekend for you, in between the barbecues and all that, to just sit down and take stock of how your first half of 2023 has been. Professionally, personally, physically, financially, all the different areas of your life that we talk about setting goals for. For me personally, besides this past month when I was moving and traveling and doing all this, I was homeless for a week, all these things. I've done very well physically this year. Financially, been hitting my savings goals. Professionally, I've had a really good year professionally. With performance-wise, dealing, clients, adding clients, been very good. And then personal goals. Oh man, this is when I thought about just recording an entire episode that was just. I don't know how well that would go over, but so one of my big personal goals this year, right, has been the CFA exam, and so I took the CFA exam in May. And right before the CFA exam, I realized I was moving. I realized all these changes were going to go on in my life. And I didn't. I was like, you know what? I'm going to take the exam no matter what. Well, I did not pass the CFA exam the first time taking it in May. And, was it devastating? I'm not going to say it's devastating. It's definitely humbling, but I knew it was going to be humbling before I did it. I've already signed up for November because I am married to this thing until it is done. I mean, I really am just committed to doing it. And for me, it's just, again, I've said this on the podcast already, but it's slaying the dragon. Like when I went to college, I did not do well on the ACT exam. And I got to get this out of my head, but I'm not great at standardized tests. And I know it's crazy because I'm a professor, but like when you take a class, it's a body of work. It's not just one exam. And so I think the podcast that I did where I talked about the CFA exam, I thought I did really well on the back half of the exam. And when I got my results, guess what? I did really well on the back half of the exam. And so the first half of the exam, not so much. And there were some areas, it's funny, like portfolio management, there's a section, I did really well on that section, really well. Derivatives, really well. What was my worst one? Economics, obscure economics. But it's also the first part of the exam is the stuff that you study first. And so when you look at studying for something over 6 months, I went through all that content, and it's a lot of content. And I had some of you actually reach out to me and say that, you deferred to November because you realized, like, man, this is so much content. So some of the stuff that I had studied last December, January, as I'm going through trying to get through all that content, I didn't have enough time to go back and review. And so I think when I took that exam, the stuff that I had covered, 4 or 5 months before, I just could not remember what things were. They don't give you a formula sheet, so you got to remember all this stuff, which, it's just a challenge. And so for me, my clients come first, real life comes first. And so you're studying for this thing as best you possibly can. But I'm going to go ahead. I'm going to do it again. In November, I've been looking at my study strategy as a way to put in time where I go back and study the other stuff that I've already covered. And so we'll see how November goes. But, these things are tough. They're not giving them away. It's like a lot of goals. Like nobody's giving it away. You got to earn it. You got to dig deep, and you got to hope that, on test day, you get questions that are kind of right up your alley, because there's always some obscure stuff that you're like, oh my gosh, like where did this come from? So for me, that's my first half of 2023. I'm very satisfied with a lot of things. I mean, my goodness, this year in the market has been much different, much better than last year. And so, but I always think about when times are good, you have to think about, when it's summer, you got to think of winter. When it's winter, you got to be thinking of summer. And so last year we did a good job of staying poised, knowing and believing in our research that the companies that we had invested in and researched that our research was right. And our steadfastness and our poise has paid off this year, and just keeping to invest in those good companies has really paid off. So I know many of y'all that are listening to this have been listening for a while. And so I appreciate, and I hope that you made some investments into some good companies that we have been discussing over the past couple of years, and that you are having a good year in the market this year as well because of this. And so that is my hope. That's the reason I do this. For a lot of my clients, this has been a very good first half of the year, solid first half of the year, and I hope we build upon it. So remember, this is for entertainment and education purposes only. Please talk to your financial advisor. I'm not your financial advisor, and reach out to them or reach out to somebody to put yourself on a path to financial independence. You will not be sorry. Anytime you invest in yourself, mentally, financially, it's always time well spent. So I hope you had a good first half of the year. Excited about the second half of the year. Don't mistake activity for achievement, and I'll see you next time. Thanks, everybody.